Welcome to another episode. My name is Jose Najarro, and today we're going to take a look at my stock account. We're going to do a quick review of how it's doing and compare how it would be doing across if I was just invested in the market. So right now, this is January 5th. I think this is 2 weeks after my previous video taking a look at my portfolio. So let's get started. Like always, I have my buddies, Bull Solo, Darth Bear. But in these types of video, these guys don't do anything but stay and look pretty. So I hope you guys enjoy their company. So just remember, this is my, I'm going to start changing this. It might not be a brand new account. This has become my YouTube account. I started this account in November 8th, 2019. I'm showing how would I invest while the market is at all-time highs. So I invest $400 into about $400, more like $430. It's a percentage of my paycheck that goes directly into this portfolio every 2 weeks. This account will be one to match my YouTube videos. And like I said, I started this in November 8th, and when I started at $15,000. It is now sitting at $17,500 in the lapse of 2 months. So I think that's pretty impressive. It helps you show that how just depositing money into your account can help you grow your account pretty fast, right? In less than 2 months, this account has grown over $2.5 thousand. So right here, I just have screenshots. I haven't updated, but just screenshots of how every 2 weeks I put money into this account. So rules I'm following. I want to have money in the market at all times. Since this is a small account, I want to diversify between companies. I have full positions. I have different position sizes for full positions of big cap. Big cap companies would be normally around 1,000 to 1,500. Full positions of mid and small caps would be no greater than 750. And since I'm mainly into tech companies, I use ETFs outside of the tech world to be diversified into different companies. This is how I want my portfolio to look. Large cap companies, not counting ETFs or any form. These are just individual large cap companies. Must be greater than 25%. I don't care if it's 50%. At the end of the day, I just need this to be greater than 25%. Mid and small cap companies, I don't want this to be greater than 15%. ETFs, I want this to be greater than 20%. Cash and short-term bonds, I want this to be about 20% of my account. And others, REITs, bonds, commodities, metals, I don't want this to be more than 10%. This total gives me about 90%, so I still have plenty of room to move around with other different types of investments. So let's take a look at my account. This is my account. We're going to look at it previous and thing, but this is just a quick look if you guys want to pause and take a look at the values themselves. Here you can see as of 1/4/2020, 11/4/54 p.m. So you guys can see the timestamp. So let's start off with cash ready to use. So red, the ones I have highlighted in cash is red. So right now I have about $5,153 of unused cash, which right now is 29% of my account. And I think that's pretty heavy right now, so I need to drop this down. I keep saying I need to drop it down, but it's just pretty hard, right? With the market at all-time high, it gets a little scary. Really determining what to buy or what would be a great investment. So I have to do a little more research, a little faster, just to be able to find a better way to use this money. I need to drop this down by a little less than $2,000. And here in cash, I have about 3.1 in cash and 2,000 in an American Express bond that is set to expire in, I think, early March. So that's how I have my money working with right now. The lucky thing is when you have your money in a broker account, it does go into a small money market account. So you do make up a little percentage opposed to having it in a savings account. Last month I had about 4,800 in cash. So you can see my cash has increased, so it means I'm not making my money work, and this is something I definitely have to do. All right, so next we're going to take a look at my ETFs. My ETFs are blue. I have XLY, VCR, XLY, which is similar position to VCR, which is just consumer discretionary items. Then we have VDC items, and then we have Berkshire Hathaways. So all of these companies, all of these ETFs are based on companies that I usually don't invest solo. So we can see VCR and XLY pretty much the same. They have Amazon, Home Depot, McDonald's, Nikes, and Starbucks. And these are companies that you're gonna see I don't invest too much heavily on. I do have Starbucks in my large cap companies, but it's usually a small percentage, right? Most of them are usually tech companies. VTC like has Procter & Gamble, Coca-Cola, Pepsi, Walmart, Costco, and Berkshire has Apple's, banks, and has a lot of airplane transport items. Right now, this makes up 19.4% of my account. Remember, I need to make this higher than at least 20%. Last time, this was 19.8% of my account. So I need to increase my ETS. And I think when market opens on Monday, I want to buy a little bit more VDC and maybe Berkshire Hathaways to increase this to a nice percentage, at least a share or two between the two. So like I said, right now, since last time, there's no new positions, no increase in positions, and my idea is to buy more VDC and Berkshire Hathaways at the moment. So next, let's take a look at my small and mid caps. So right now for my small and mid caps, no big changes. I have the same guys. I have Macy's, I have GameStop, I have Opera, and I have Garage, all small caps that I have done videos on in my YouTube videos. So make sure to check them out if you want to learn more about these companies. Right now, this is sitting at 9.2% of my portfolio. I don't want this to be higher than 15%. So right now I'm sitting okay. Last time it was at 8.6%. So I did make a little money work here by increasing my size in small and mid cap. And I actually just did a video on CRNC. So I'm going to end up buying some of those shares on Monday as well, which is also going to increase my portfolio here and make some of that money work for me. So at the moment, no new positions as of yet, but coming in Monday, I am going to have CRNC in this small cap category. And I did increase position of Garage in the past, since the past video. But we can see, right, all these are making pretty small movements. Next, let's take a look at my big caps. My white, all the ones in the white are my big caps. No big changes. AMD, Activision, Boeing, Cisco, Disney, Intel Core, Microsoft, Starbucks, Twitter. Total about 7,300 of it. It's about 42% of my account. I want this to always be 25%. Last time this was about 40%. So you can see my money is working here. I did increase into my big caps. I did not sell any positions. I did not buy any positions, and I have not increased any positions. As we can see, my big caps still make up a good portion of my portfolio. So right now I want to increase my ETS and maybe just buy a little bit in some form of commodities or metals, just to have a little bit of that cash working elsewhere instead of cash, because I have too much cash right now. And like I said, I'm going to increase my position in small and big caps in the next episode. So in my previous video, large cap was 40.3%. Currently it's 42%. I want this greater than 25%. So that's a check. Mid and small cap, last video was 8.6%. Now it's 9%. I don't want this greater than 15%. So that's a check. ETFs, I want this greater than 20%. Previous video was 19.8. I was really close to it. This video was 19.4, so I'm continuing to go down. So I need an increase there. I need to increase my ETF portfolio diversification. So that's not a check. My cash is also increasing, which is something I don't like. 28.2% in cash. And right now, last video, and 29.5 this video. And I want this to be 20%. And the other are other commodities. I have 0%, and that's okay because I don't have any rule on those. But right now, this is how I want my my account to look. And let's just take a look real quick on my overall portfolio here. Let's see if you guys can see, right? Total percentage gains, right? We have, you can, like always, you can see my large caps are my biggest winners, right? Microsoft 10%, AMD 32%, Activision 10%, Twitter 8%, 6%, 6%, 5%, 4%, 10%. These are ridiculous, right? If we take a look at my ETFs, these are probably going to give me the same returns as if the market would be giving, right? 2.5%, 4.6%, 3.4%, 2.7%. And my small and mid caps are actually not doing too bad. Garage is actually killing me a little bit by that negative 2.7%, but small and mid caps are small and are small positions for that reason. Macy's is up 10%, GameStop is up 1%, and Opera is up 2.08%. but I do want to increase the portfolio on both Opera and Jerash a little bit as well as increase that portfolio of CRNC. So we can see, right, large caps are my biggest winners by far. And even though VCR, VDCR, ETFs, which will kind of be giving me similar returns to what the SPY would be giving, just because the whole market as a whole is moving, I would assume that the overall market has given about 5% returns. You can see a huge portion of my returns had come from my large cap individual stocks. So now this is my favorite thing to take a look at. Current rewards. I want to see how my portfolio would do, is doing compared to if I had invested all my money in the SPY. So remember, my account right now is 17.93, and if I would have invested all the money in my account the moment it went into my portfolio, so you know how I'm depositing $430 every 2 weeks. If the moment I put it into a portfolio, it went into SPY, this is the amount of money I would have. The amount invested, if invested in SPY, I would have $17,460. This is not counting dividends, so with dividends, this might be a little bit higher. But look, my portfolio right now, with how I have it right now, is actually beating it on just the pure balance value, right? I'm just not looking at dividends. It is 17,493. I'm actually beating the market by $32, which is not a big thing to talk about, right? That's not huge returns. That's nowhere near huge returns. But remember, right now, 30% of my account is cash. So that 30% of my account is not making money. So this again is big news. Right now I'm able to keep my returns similar to that of the SPY, similar to that of the stock market, but at the same time, 30% of my account is still in cash, ready to go to work. So imagine once I make that money go to work, how much better I can make this account do. So that's why I enjoy doing all my YouTube videos where I take a look at a company and I understand the company before investing in it, because it helps me increase my chances of doing that much better. But look, in the last time I did this video, my account was 16.8 thousand. Now it's sitting at almost 17.5. Total returns last video was 553. Now it's sitting at 734. So I'm pretty happy with my returns in the past 2 months. I'm hoping you guys like these videos, and let me know what you guys think. Let me know, post some comments on some of the videos, on some stocks you think I should do a video on to see if I should build onto my portfolio. So I hope you guys enjoy it. Take care. See you next time, and have a good night.